Hello, welcome in everyone. We're going to wait just a couple more moments. We have a couple people just getting into the webinar here on Facebook Live. So we appreciate everyone's patience. All right, we'll get started. Thank you everyone for being here. Hello, my name is Tony Beyer. I'm the Financial Literacy Coordinator for Ultra Federal Credit Union, also a certified credit union financial counselor, here to talk about an important financial tool, and that is credit. How to use it, what to know about it, and how to use it responsibly. If we use credit responsibly, it can open up doors for us. We could pay less in interest. It could make us more likely to be approved for loans, insurance, many different things. But if we use it incorrectly, if we use it to live beyond our means, it can do a lot of damage. So we're going to throw some information at you, hopefully not overwhelm you too much. But if you have any questions, please leave those in the chat and we will be sure to address those at the end. So we're going to be hunting for a great credit score and help you take control of your credit. So what we're going to be talking about in our brief time together, it's really just understanding credit reports and scores, how they work, what makes them. Also talk about credit reporting agencies. We'll really focus on the big three, but there are more than 3 credit reporting bureaus. What's changed since COVID-19? There are some different things that have changed since the pandemic started. Some different myths around credit. And then also how to improve our credit standing and how to get our own credit reports. So when it comes to credit, it all comes down to underwriting. And what underwriting is, it's basically the decision of extending credit, maybe saying not right now, or maybe counteroffering as well. So these are the 4 things that are taken in consideration when it comes to extending credit. The biggest part of it, it's credit history. How have you been with credit? That's a good indicator of how you're going to be in the future. If you've been good with credit in the past, more likely you'll be good in the future. If you haven't been good with credit in the past, it doesn't mean you're not going to be good in the future. It just makes lenders and those extending credit just a little bit more nervous. The second C is capacity. That is how much credit's available to you and how much are you using. Just because you have a bunch of credit available to you does not mean you need to use it all. Next is character. So looking at other accounts, looking at relationships with that financial, again, all of that is an indicator of how you may be in the future. And then last, it is collateral. Collateral is an asset that backs up the loan. It's what could be put up if things don't go as planned. So those are the 4 C's of underwriting, and those are what's taken into consideration, again, when it comes to extending or approving credit. All of this is reported to credit reporting agencies. The big 3 that we are talking about, Equifax, Experian, and TransUnion. There are more than 3 credit bureaus, but these are the 3 main ones. Now, basically what they're doing is collecting all credit information. They're basically the keepers of the credit information, and they provide that information to consumers and those that are authorized to pull that credit. So they don't issue a score, they just give information. Now, in a credit report, there are 4 sections. So it is identifying information. That's going to be your full name, any maiden or former names, even any nicknames that you may have that credit's been opened up in. Looks at your address, former addresses, current employer, former employer, date of birth, social security number. All of that information is to verify that it is in fact you, and this is your report. The biggest part of a credit report is going to be the different trades, the trade lines. So different forms of credit in the biz, we call those trades. So it's going to be when was it open, what's the current status, it's going to be what are the payments each month, if it's closed, how is it closed, and then that whole history of it. So that's going to make up the biggest part of a credit report. Next, it's going to be any public records. So we're talking about liens, so those that may have ownership over an asset, bankruptcy, evictions, collections, foreclosures, judgments, all of those are also going to be on a credit report. And then at the end, it's going to be inquiries. So who has accessed your report? When it comes to inquiries, there are 2 types. There are hard inquiries and there are soft inquiries. Now, hard inquiries mean that basically someone authorized an organization, a business, a financial institution, could be an employer, landlord, utility company, that you gave them the okay to pull your credit report. And those inquiries are going to be on a credit report for 2 years, and then they fall off. That's that falling off. And then there's soft inquiries, and this is if you pull your own report or if there are any pre-approved offers. So a soft inquiry does not appear on your credit report, and it does not hurt you whatsoever. But if you have a lot of hard inquiries, that may affect your credit score and credit standing. So speaking of a credit score, all of that information from a report breaks down into a score. There are many different types of credit scores. The most common one that most are most familiar with, it is going to be the FICO, the Fair Isaac Corporation score. And that ranges anywhere from 300 to 850. And what that credit score does, it assesses risk. So the lower the score, so that's somebody that hasn't been very good with credit, or maybe they haven't had credit very long, they're going to be a higher risk to a lender. If the score is higher, they're going to be lower risk. And if someone has no credit, they just don't have a score. There's not enough information in order to do that. So FICO breaks down their score in the following ways. 35% is the payment history. That's the biggest portion of the credit score. Next, it's going to be capacity. So how much credit's available and how much are we using? That's another big chunk of the score. 15% is the length of your credit history. So those with a perfect credit score or those who have a near perfect score, they've been good with credit and they've been good with credit for a long time. 10% is what's going on lately. Have balances been going up or have they been going down? Have we slowed down on opening new credit accounts or have we been making more applications, having more inquiries? So it's what's been going on lately, and that's going to have a big effect on your score. And then last, it's going to be the mix of debt. So not all debt is created equal. We will get into that in the myths. But installment debt is typically looked upon more favorably than something like credit cards, or we consider that revolving debt. So an installment loan, that's going to have a set schedule. It's going to be X amount of payments for Y amount of months. And there's usually an asset or something of value that backs that up. That is looked upon more favorably than something like credit card debt, unsecured debt, something that has nothing to back it up. And we call those that do not pay their balance in full every month on a credit card, those are revolvers. That makes up about half of credit card users. The other half, they are convenience users or they're called transactors. So they are making their payments in full on time every month, and that's what we recommend. So things that hurt your score. What are the biggest ones? It's going to be missed payments. We want to make sure that we're making our payments on time, especially in full. At least the minimum balance, but we want to make the full payment, and we want to make that on time. Very important. Next, it's having your credit cards at capacity. Again, just because you have that credit available to you does not mean you need to use it. We want to keep that capacity low, especially on credit cards. We want to be below 30%. That's if we get above that, then we're in the danger zone. Closing credit cards can also hurt your score. Now, it may sound responsible closing a credit account, but I'll show you how it actually can hurt your score in a couple different ways. So let's say that we have two credit cards. We have our Ultra Signature card, of course. It has a $3,000 limit, and then we have another credit card that has a $2,000 limit. So we need to figure out how much credit's available to us. We add those together, 5,000 American dollars are available to us between those two cards. Now let's say on our Ultra card, we owe $1,000, and on that other credit card, we have a zero balance. There's no balance on it whatsoever. So to figure out how much credit we are using, our utilization, we take how much we owe, $1,000, divide that up with how much is available to us, and we have, it's 20% utilization. So we're under that 30%, that's pretty good. Zero is obviously great, but 20% not too bad. Well, now let's say that card with a zero balance, we don't use it anymore, we're gonna get rid of it. So we bring over our Ultra Signature card that still has the $1,000 that we owe. That didn't go anywhere. But instead of having $5,000 available to us, now we only have $3,000, and that brings us up to 33% utilization just by closing that card. So all of a sudden, it made our what we're using credit-wise in a not so desirable level. And also, if that credit card that had the zero balance, if it's something that we've had open for a while, that can also hurt our credit score because, again, 15% of our credit score is the length of our credit history. So if you have a card with a zero balance, an account that's older, and you don't owe anything on it, it's a good idea to keep that open if you are able. Now, if it's going to tempt you to spend, if there's a high annual fee, then you might be better off closing the card. But in the case of an annual fee, if we're not using the card, look into calling the issuer and seeing maybe you can get into a card that doesn't have an annual fee, perhaps. But it's in your best interest to try to keep that open if you're able. Also, opening up a lot of trades in a short period of time, that is going to hurt your credit score as well. If you have more revolving, again, you can read that as credit card debt in relation to installment loans. Credit cards are looked upon less favorably than installment loans. If we are shopping for credit excessively, if we're filling out a lot of applications, especially if we're getting denied, that is going to hurt our score. And again, missed payments is going to be one of the biggest things that hurt our score. And actually, a single missed payment can be on our credit report for up to 7 years. Bankruptcies can be on our credit report for up to 10 years. So it's really, really important to make your payments on time and in full every month. So things that don't affect your score, it's your debt and your income. A credit score, a credit report has absolutely no idea how much money you make. It knows your credit accounts, it knows the status of them, how much is available to you, how much you're using. It doesn't know how much money you make. It also doesn't know anything about your employment. It knows where you're employed, a credit report does, but it does not know the type. So is it full-time? Is it part-time? Is it seasonal? Is it depend on commission? So it's not consistent every month. It does not know any of those things. And also, a credit score doesn't know anything about where you live. Are you renting an apartment? Do you have a mortgage? How long have you been there? How steady is that? All of those things are not reflected in a credit score, but lenders, now they're going to want to know this information and will be required on an application. Some different myths I want to get into when it comes to credit. These are some of the big ones. So checking your credit hurts your score. It absolutely 100% does not. It's seen as very responsible and you should do it. So checking your credit report, you can get your credit report free from each of the 3 main credit bureaus that we mentioned earlier. And then also checking your score doesn't hurt your credit at all. It's all considered a soft inquiry. It's seen as responsible, so you should absolutely do it. More income equals a better credit score. Like I said before, a credit score has no idea how much money you make. There could be some high earners earning 6 figures, living paycheck to paycheck and overextended on their credit and actually could have a very poor score. And those with a very modest income, they can have a great credit score. So income plays no factor whatsoever in a credit score. Also, married couples, they do not have a single credit report. They do not have a single credit score. It's each individual in a marriage. So if something is owned jointly between spouses, that's going to be reflected on each different credit report. Credit scores, again, the same. Now, where some of this confusion may come in, there are some states that are community property states, Wisconsin being one of them, Texas another, where if an asset is acquired during marriage, it belongs equally to both. So that asset is still going to be on each different credit report, and they're going to have different credit scores as well. Paying off credit cards in full hurts your score. It does not. That is a myth. You do not have to pay interest. You do not have to carry a balance in order to have a great credit score. So making your payments on time, in full, it's going to help your credit score. And also, you're not going to pay any interest whatsoever. The average credit card right now, the interest rate, according to creditcards.com, is 16%. Anything you do to not pay that interest, certainly do that. But pay your credit cards off in full, on time, every month. All 3 credit bureaus have the same information. That is also not true. Some utilities could be financial institutions. Basically, creditors, they may only report to 1 or maybe 2 credit reporting bureaus. They may not report to all 3. And those credit bureaus are getting credit information from many, many different sources. So that's why it's important to check all 3 of those to make sure everything on there is yours and make sure everything is correct on your credit report. So they can differ a little bit. Debit and prepaid cards are going to help your credit score. They are not, unfortunately. Main reason, they're not credit. Debit card, that's going to be connected to an account. That's your money. Same thing with a prepaid card. neither of them actually do anything credit-wise. They may have that Visa or MasterCard logo, and they're accepted where credit cards are accepted, but they do nothing for your credit score because they're not credit. Opening new credit accounts will hurt your score. Now, there's a tiny bit of truth to this. If you are opening up a new credit card or a credit account, you may see an initial hit on your credit score initially, but it's very short-lived. It's temporary. It may actually raise your score because you have more credit available to you in the future. All debts are created the same. They are not all equal. Like we mentioned earlier, credit card debt, that revolving debt, that is looked upon less favorably than installment debt. So something like a 30-year fixed mortgage, that's going to be looked upon on your credit report as much more positive than something like credit card debt. So they are not all created the same. They are not all equal. Paying off debt erases it forever. Our debt could stay on our credit report for up to 7 years, like we mentioned. So if there's any collections or anything like that, it more likely will stay on your credit report after it's been paid off. Now, if it's a positive record, that's something that's going to help you. But if it is negative information, the older it is, the less effect that it has on your credit score and credit standing. Now, in the case of collections or something like that, you may be able to work with that agency. You may be able to work with the bureaus to try to remove it after it's paid off, but it will remain on your credit report after it's been paid. You could fix your credit overnight. Unfortunately, that is not true as well either. When it comes to credit, how we're going to repair it, and we'll talk about this in just a moment, but it's going to be on-time payments, it's paying down balances, it's slowing down opening up new credit accounts, and it's going to take the passage of time is what's going to happen. Those promising a quick fix or we could raise your score 100 points overnight, don't believe that. It's going to take time and payments on time. Once credit goes bad, it will always be bad. This is not true either, thank goodness. Many different stories, reports of those with undesirable credit, that they're in that lower level over time with on-time payments, paying down balances, slowing down opening new credit accounts. They can actually improve their credit and get into a good or great level. And once credit is good, it's always going to be good. That's not true either. If we are missing payments, if we are maxing out cards, things like that, that is going to lower our score. So those are some of the big myths that we want to address. How to improve our score? We want to pay down credit cards. That's going to be one of the most negative things on a credit report. It's that revolving debt. We want to decrease our usage of credit cards. So we want to make sure that we are paying for things in cash or maybe with our own money through a checking account, but we want to reduce our reliance on credit. Continue to make payments in full and on time, very important. Keep old accounts open if you are able. But again, if it's going to tempt you to spend, then you might be better off closing the card. If you don't use the card after a while, some issuers, they may close the card due to inactivity, and that's really to protect the borrower. So if you're able to charge something small, then once you get your statement, pay that off. Another idea, it's something that you may already be paying for every month. Maybe you have a streaming subscription. You could tie it to that card that you want to keep open and then just have auto pay from a checking account, so it's one of those things that you never see or touch and it stays open. We want to avoid applying for credit. Only apply for credit if we really need it. And then our last option, we could consider moving some of that revolving debt, that credit card debt, into an installment loan. So that could be a second mortgage, a home equity line of credit perhaps, but only do this if you know you're not going to run the balances up on those cards again. And typically in order to do this, you may have to pay fees or closing costs in order for those loans. But more likely you're going to be paying less interest than you would be on a credit card, but only do it if you're not going to run up the balances. If you're going to run up the balances, do not do this. This is why this is the last option. Do everything before, then possibly consider this. Credit repair. So again, beware of those companies making huge promises and typically paying or charging high fees. And typically they're doing things that you could do on your own for free. They may be bombarding the different credit bureaus with disputes, and the credit bureaus, they have at least 30 days to get back to you. Now, if that information is accurate, there's no way to remove it from a credit report. And they may also have you engage in possibly, I don't want to say illegal, but not so great tactics. So may even in some cases, there have been reports they've had people change their names. Yeah. So they say, "Oh no, this isn't this person's debt. This is James Smith. All that debt belongs to John Smith. That's not him." But again, if it is accurate information, there's no way to remove it from a credit report. But the older it is, the less impact it's going to have on your credit score and credit standing. So this past spring, due to the pandemic, the CARES Act, the Coronavirus Aid, Relief, and Economic Security Act, was passed. And there are relief options for borrowers, those affected by the pandemic. Many are affected by the pandemic, either reduced in hours or income or job loss. Many different things have happened. So it requires creditors to report any accounts that are current at the time of making an agreement. So if you are having troubles, reach out to your creditors right away. But once you reach out to them, if your account was current, it will remain to be reported as current to the bureaus. Now, if it was delinquent at the time of making the accommodation, it's going to continue to show that it is delinquent, that it is past due. But once it gets positive, once it gets to everything's all square, then those credit bureaus are required to report those as being on time and being current. But like I said, if you're ever having any troubles, make sure that you are reaching out to your creditors. If you're still able to pay your bills on time, continue to do that. That's going to be your best option. But contact your creditors, your service providers. They may have options, but you're going to have to be the one that reaches out to them. But monitor your credit. And also another thing with the CARES Act and what's going on right now, you're able to pull your credit report free from each of the three lenders or three main credit bureaus, Equifax, Experian, TransUnion. You're able to do that once a week until next April. In the past, it was only once a year. So take advantage. Every week, you're able to get your credit reports to make sure everything is correct and accurate. Because one of the things, unfortunately, with this on the rise has been identity theft and different scams as well. And seek financial assistance. At Ultra, we have a team that works with our members in order to help. So reach out. There's many resources. Also look at your state and county, local municipality resources as well if you are struggling. But reach out, but know that there are options right now. To reestablish damage credit, we have a couple options. We can get a cosigner for credit that we may be applying for. So someone that has, they're in a good credit standing, have them be a cosigner on a loan or a credit card, more likely to be approved with that. But know as a cosigner, if that primary person is unable to pay, that cosigner is on the hook for those payments. Could also get a secured credit card as well. So a deposit is put down. That's going to be what backs up the card. And if we're good with that credit card, if we're making payments on time in full, after a while, our deposit will be returned to us, and we may be able to graduate with an unsecured card. Another option as well is to be an authorized user on someone's credit account, somebody that is very good with their credit. That may be something that can help out as well. Good credit score is needed for many things, so better loan rates, lower interest rates, more likely to be approved for those larger purchases and paying it back over time. Lower insurance rates. Insurance companies tie better credit score and better credit standing to lower risk. Gaining employment. Many employers may check a credit. I know at a financial institution, they definitely do. If we're renting an apartment, a landlord may request credit report or access to that. And if we're establishing any services, so maybe we want to set up internet or utilities at our home, or maybe we're financing a cell phone or setting up a cell phone plan or a new contract, they may check credit for that as well. So the FACT Act, the Fair and Accurate Credit Transaction Act, is what I mentioned earlier. That's how you're able to get a free credit report from each of the three main lenders or credit bureaus. And right now you're able to get those once a week. So definitely take advantage of that. You're also entitled to dispute anything that's incorrect or any errors on your report as well. But you can get your credit report free, and the only place to do this is annualcreditreport.com. If you are at a site that's asking for card information, payment information, get out of that. Annualcreditreport.com. It's going to ask you identifying information, and then also it's going to ask you questions of items and things that will be on your credit report, again, to make sure it is you doing that. But I can't stress that enough. Annualcreditreport.com. Take a look at your credit report. Reasons for obtaining a credit report. So if we are thinking about taking out credit here in the future, maybe we're thinking about a mortgage, maybe we're thinking about an auto loan, or maybe employment, or looking at our insurance needs. It's a good idea to check your credit report to make sure everything on there is yours, it is accurate. And also, if you've been using credit for quite some time, there may be old credit accounts that you have forgotten about. I know that this happened to me. I opened up a store card at a department store, kind of to help out a friend, as far as application. Paid off that card as soon as I got my statement, completely forgot about it. And they kept that account open without any activity for a little more than 10 years. They were really hoping that I would spend there. But that can happen as well. But it's a good idea to review them at least annually. But like I said, you can get them once a week, so do it more often than that. If there is any inaccurate information on your credit report, we want to dispute it with the credit bureau and then also with the creditor as well. Each of the three main bureaus, you're able to do this over the phone, or online is really an easy way to do it. All of them have a form and are able to do it online. They have 30 days in order to review the dispute and get back to you. But also with the creditor, you want to dispute this information. And on the last page of your credit report is going to be the contact information for all of your creditors that are listed on the report. And the last thing that we could do, we can add a statement to the end of our credit report. So if something happened, maybe there's a hardship, maybe there was a medical emergency, maybe there was job loss or hours cut or something like that, it's a way to basically tell your side of the story when it comes to a credit report and why things are the way they are. These are the reasons to check your credit report. So if we're applying for a loan, employment, any new financial accounts, insurance, rental agreements, the collection of debt, they can also check your credit. And then if we're establishing any utilities as well. We have a lot of different resources at Ultra, not only our people, but online as well. So if you go under the digital tab and if you go to financial resources, a lot of information, a lot of education materials there. But also we have not only our people, but we have GreenPath Financial as well. So counselors that are able to work with our members. It's a service that Ultra pays for. So it's something to definitely utilize, but we have many, many different ways to help. We are here for you. So the big takeaways, what we covered in our short time together, it's basically make credit payments, make them on time, make them in full. Only open new credit accounts if and when we really need them. Do not use credit to live beyond your means. That's why it's so important to have a spending plan and know your fixed costs, know your variable costs. What are your priorities? What's important to you? Make sure that's in your spending plan, but don't use credit to live beyond that. Check your credit reports regularly. Make sure to stay on top of all of your accounts. And if anything suspicious happens with any of your accounts, report that to your financial institution right away. And also reach out to your creditors if we are struggling at all, if we're having any troubles paying our bills in full or on time. More than likely, they're going to have options that are going to work for you, especially right now during the pandemic. So I know I threw a lot of information out at you in a short period of time, but I really, really appreciate each and every one of you taking the time to learn more about this important topic. Now here to answer any questions or see if we have anything in the chat. All right, appreciate it. Thank you so much. Look for more information on our website at ultra.org or any of our social media channels. But we really, really appreciate you taking the time. Thank you so much and have a great day.